This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and/or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy. Hello, you sexy sat stackers, and welcome to the latest episode of the Bitcoin Bulletin Podcast. I am Chris, and today is Wednesday, February 7th, 2024. Of course, that means it is DCA Wednesday, but we certainly have a lot to talk about besides just our sat stacking journey. For example, since we last spoke, Nayib Bukele was reelected to a second 5-year term as president of El Salvador. The COPA Trial, the trial against Craig Wright by the Crypto Open Patent Alliance in England, is underway. The New York Community Bank Corp looks like it might be the next bank to fail as the bank runs continue, as Matt Odell and Marty Bent like to say. And Michael Saylor keeps stacking like an absolute madman. All right, before we dive into the news, let's take our traditional look at the vital statistics. As of the time of this recording, we are sitting at a block height of 829,441, and Bitcoin is ringing in at a US dollar value of $44,480, and that will mean that you will only receive 2,248 sats per every US dollar that you convert into Bitcoin. And while that is still less than the run-up on the eve of ETF approval on, Thursday, January 11th. Other than that blip, which was very short-lived, we're talking hours, this is the highest we have seen Bitcoin in almost a year. I think we have to go back all the way to March of 2023 until Bitcoin was higher than it is right now at this very moment. So if you are impressed by number go up, if you like seeing the fiat value of your stack increase, that'll make you happy. However, if you are a sat stacking maximalist and you want to receive as many sats per cuckbuck as you can possibly receive, unfortunately, we're going to receive about 55 fewer sats per dollar this week than just last week. TikTok next block, we are now just 10,559 blocks away from the next Bitcoin miner award halving. As you know, the reward that miners receive for finding the next block is cut in half every 210,000 blocks until all 21,000 Bitcoin are awarded. The next halving is scheduled to occur on approximately April 19th now. It's about a day earlier than it had been, depending on what site you're looking at to forecast that date. Either way, the one thing we know for sure is that it will occur at block 840,000. That is now less than 2.5 months away. You know, it seems like just the other day I was saying, Halloween's coming up, then Thanksgiving's coming up, then we've got Christmas and then New Year's, and before you know it, we're going to be at the halving. Well, all of those holidays are out of the way now. Even Groundhog's Day has come and gone, and the only thing left out there is Singles Appreciation Day, which of course is known by Valentine's Day or St. Valentine's Day to some of you. And then of course the halving. And the halving is by far the biggest celebration, the biggest holiday out there in Bitcoin space. Obviously, many Bitcoiners are Christmas or Hanukkah maximalists, but as far as Bitcoin itself is concerned, the halving is more than just an annual holiday. It only comes around about once every 4 years. And of course, it is traditionally the beginning of the next major face-melting Bitcoin bull run. Obviously, Bitcoin doesn't set a new all-time high usually until about 6 months to a year after the halving. Everybody was pretty sure that was going to happen before the halving this year, after the sell the news type of event that we had with the ETF approval. And I'm kind of getting ahead of myself. I don't think it was really a sell the news event. I think maybe people didn't anticipate just how many people were going to finally bail out of the Grayscale Bitcoin Trust once they had an ability to do so. All those people that were stuck underwater when Grayscale was selling at a major discount to the actual spot price of Bitcoin finally had the chance to sell or convert their their GBT shares back into Bitcoin, or of course they have to cash out back into cash and then do whatever they want, whether they buy Bitcoin or buy some other ETF. And then of course there were the big sell-offs from the companies that had been that went bankrupt, kind of not in any small part thanks to that GBTC arbitrage trade that was going on, that so many Bitcoin related companies got caught up in, and not the least of which to include Gemini Earn, Coinbase, etc. And now that those companies are in bankruptcy, the bankruptcy court is liquidating their GBTC. We saw that, we talked about that last week, the huge dump that was caused when the FTX, I guess the FTX bankruptcy attorneys, the FTX estate, the FTX bankruptcy manager liquidated more than $1 billion worth of GBTC. And of course, that only depressed the price for a couple of days and it rebounded. I'm getting a little bit ahead of myself because we are going to talk about that in the news section. So let me get back on track with the statistics. Bitcoin's current price gives it a market capitalization of $872.8 billion. That is about $21 billion more than just last week. Still far short of that $1 trillion mark that I keep saying is kind of a magic number. I have a little bit of a reverb going on in my left ear, and I don't think it really exists. Folks, I am under the weather today. I have the virus which shall not be named, and I'm kind of perturbed about it. And the reason why I'm kind of upset about it is because I shouldn't have it. My son, his employer, he was at work last week, over a week ago now, and they were shorthanded, and one of his coworkers came in sick, really sick. And because they were shorthanded, they made them stay. Well, naturally, he had the virus, which shall not be named. And about 3 or 4 days later, my son was sick, running a pretty good fever. And then a couple days after that, my wife was sick. And then the day after that, I was sick. So, I've been very outspoken about this as much as I can be without getting banned. It's a little easier on the podcast circuit, but even this podcast is now hosted by Spotify since Spotify bought Anchor. So even Spotify has the ability to unhost us. Of course, we could find somewhere else to host our podcast, but you get my point. I've still been reasonably outspoken about this whole thing. I was certainly unhappy with the way they rolled out the jab. I've been unhappy with the face diaper thing. So a couple of takeaways. It wasn't as bad as it could have been. Mainly, it's just annoying. I've had a fever for like a day or two. Everyone in the household got it regardless of vaccination status. And we have the gamut in my house. We have someone that had the one jab by the company that starts with an M, the jab that starts with the company that starts with a P, and then we have the unjabbed. And all of us got the sickness, and all of us had the exact same symptoms for the exact amount of time. I was the last one to get sick, so I'm the last one to recover. As a result, I'm a little stuffy headed. My ears are completely clogged, and so I don't know if there's a bad reverb in the audio, and I won't know until later when I stop recording and I go see if there is, and I try and clean it up, or if it's just a crackling in my ear. And I'm hoping it's just my ears, because they are pressurized really, really, really bad. So if my voice sounds a little funny, or if I have to pause and hit mute to cough or sneeze, that is why. But I digress. As I said, Bitcoin's market cap is $872.8 billion. A lot of OGs think market cap is a worthless metric, but the more and more normies that come into the space, particularly now through the ETFs, they talk about market cap when they're talking about the stocks in their portfolio, etc. So market cap is a useful metric to the normies. And it is kind of a useful metric when you're talking about the amount of investment in Bitcoin compared to other things out there, other companies, gold, silver, what have you. You can compare their market cap. Bitcoin still has a really, really long way to go. In fact, we're not even 1/10 of the market cap of gold yet. So imagine if Bitcoin just became electronic gold, if it just became as common of an investment as gold is, even if we'd ever got to hyper Bitcoinization, if Bitcoin didn't become a central reserve currency, if it wasn't on the balance sheets of corporations, if it was just treated like gold. And I guess some countries do have gold as their currency reserve. I don't know. Are there any countries that still back their currency with gold? They used to. Maybe they will one day. But my point being, that would be a 10x in Bitcoin price just to achieve that. So we are still early. We're not super early, as maybe early as we were even when this podcast first began 2.5 years ago. Certainly not as early as the Mt. Gox days or the early days when you could mine Bitcoin on a computer. But from the standpoint of just looking at gold's market capitalization, we have a long way to go. And that should be really cool if you're one of those people that values your wealth in fiat still. For those of you who value your wealth in shiny yellow rocks, one Bitcoin will currently cost you 21.9 ounces of gold, a half an ounce more than just last DCA Wednesday. And as I've said repeatedly, as I want to emphasize, it is only a matter of time before we're talking pounds of gold to purchase just one Bitcoin. I believe that'll happen before the end of this year. We're already getting close. It's already well over a pound, closing in on 2 pounds of gold just to buy one Bitcoin. So you get Bitcoin for the price that you deserve. And if you're a gold bug and you haven't gotten off zero and accumulated any Bitcoin, that price currently is 21.9 ounces of gold for just one Bitcoin. For those who value your wealth in pizza, one Bitcoin will currently purchase you 2,487 large pepperoni pizzas from Papa John's. That is one pizza every day for more than 6.5 years. In fact, almost 7 years. To be more precise, that's 6 years, 8 months, almost 6 years, 9 months worth of pizza, or one pizza a day, for just one Bitcoin. And naturally, as Bitcoin continues to go up and to the right, you might find yourself to the point where you never exhaust your pizza potential, where you never spend those last Satoshis. Because, think about it. If it takes you 6 years to spend just one Bitcoin, well, that's more than one cycle from now. So we will have hit a new all-time high, and we'll be going on to yet another new all-time high if history repeats. And that new all-time high could be 1 million, 2 million, or more. But as it stands, that is still a significantly higher number of pizzas than Laszlo got for his 10,000 Bitcoin all those years ago on the first Bitcoin pizza day. Looking at the mempool, on-chain activity seems to have reduced a tiny bit since last Wednesday. Last Wednesday, there were 112 blocks worth of transactions pending in Clark Moody's mempool. Currently, there are 104 blocks pending in Clark Moody's mempool. And earlier today, I was looking at Clark Moody's dashboard, and that was showing 80-something blocks worth of transactions. Of course, I also looked at the mempool on my Umbral node, and it was showing something around the neighborhood of 250 megabytes for the transactions, which is more like 250 blocks. So as you know, every mempool is a little bit different. The mempool collectively is the entire body of on-chain transactions, and each mempool sees a little bit different snapshot of that. And all of those mempools are set differently. For example, Clark Moody appears to have his mempool set at the default size, where mempool.spaces increase the size of their mempool, so they often show significantly more transactions in their mempool than Clark Moody does, as does my Umbral node. But since we've been using Clark Moody's dashboard since well before this Taproot thing enabled the whole ordinals and inscriptions shenanigans that's bloated the mempool, I still think it's useful to keep showing that in, it's kind of like in inflation adjusted terms when they talk about, money is in $2,000 or $1980. We're talking about blocks in Clark Moody blocks. And currently there's 104 blocks for the transactions pending in his mempool. That corresponds, well, actually, despite the fact that the number of transactions has trended down a little bit since last Wednesday, the Clark Moody's fee estimator it's gone significantly up. Last week, Clark Moody's fee estimator was saying that if you wanted to guarantee your transaction be mined in the next block or in one of the next immediate blocks, that you would need a fee of 44 sats per VByte. And right now, they're recommending a whopping fee of 101 sats per VByte, more than double what they were recommending last week. They are still saying that a fee of just 24 sats per VByte will be mined in a day. Optimistically, they're saying that 6 sats per VByte will still be mined in a week. However, many mempools won't even include your transaction if it's that low. They have an average purge threshold of around 21 sats per VByte, I believe, right now. Mempool.space, as usual, is telling a slightly different story. They're recommending for a high priority transaction that needs to be in the next block or so, a fee of 31 sats per VByte, which works out to about $1.93 in US dollar terms. That is up 2 sats per VByte from last Wednesday when they were recommending 29 sat per VByte fee. However, their medium priority transaction still recommends a 27 sat per VByte fee, which it has recommended the last 3 weeks in a row, so that stayed relatively consistent. And a low priority transaction, they're recommending a fee of just 24 sats per VByte, which jives with Clark Moody's fee estimator for a transaction which you want mined in approximately 24 hours. And their no priority transaction is still recommending a fee of 22 sats per VByte, which is cheaper than the last several weeks, when last week, for example, they were recommending 26 sats per VByte even for a no priority transaction. So depending where you're looking, fees are getting a little bit cheaper. That $1.93 per, in fees for a high priority transaction still isn't too shabby, considering you can't send a wire transfer for anywhere near that. Good luck going to Walmart and sending money to Mexico with one of their not Western Union, but whatever the Walmart money service is now, for just $1.93. And if we look back to just December 20th, when mempool.space was recommending a fee of 274 sats per VByte at the peak of the shenanigans, that would have been a fee of $16.65. So $1.93 is certainly a lot cheaper than it had been just, a month and a half, 2 months ago. All right, that transaction metric that I like to follow, the one that I've been tracking closely ever since I started this podcast, Bitcoin's 24-hour average transaction rate is down a tiny bit from last week, but still up in general, averaging 5.01 transactions per second. And that still jives with the concept that anytime Bitcoin transaction history is elevated, we're seeing a price uptick. It is certainly a lot higher than it had been the last several weeks when we were talking 4.3 or 4.9 transactions per second, and Bitcoin's price is continuing up and to the right. In fact, as I mentioned earlier, even though we saw Bitcoin's US dollar value higher on the eve of the ETF approval, that really was a blip. I mean, if you zoom out, that's just a tiny little speed bump. But in general, the chart still goes up and to the right. In fact, even when we were talking about being in the crab market, remember not too long ago, we were talking about the sideways market, the accumulation phase, the crab market. Zooming out on a 1-year basis or an all-time basis, you can't see much of sideways action at all. I mean, what seemed like an eternity of the price staying the same still goes up and to the right if you just zoom out and take that long-term horizon. Speaking of on-chain, speaking of mining, Bitcoin had a huge difficulty adjustment since we last spoke. 2 days after the podcast, on February 3rd, I believe it was, Bitcoin's mining difficulty was increased by 7.3%. A large portion of that was probably because, as I have often mentioned, that it was cold in Texas and many parts of the United States, and those huge corporate miners like, Marathon and like Riot have agreements with the power grids to shut their miners off to help preserve power for customers to heat their homes, etc. When in times of high demand, the weather got nice again, so those miners came back on. But even so, we're still looking at potentially another huge difficulty increase in just another week or so. In fact, we're 1,151 blocks away from the next mining difficulty adjustment. That's a little more than 7 days from now. It looks like that's going to be the day after Singles Appreciation Day on February 15th. And depending where you look at your data, that's going to be another big increase, anywhere from 5.34% to as much as 12%. And I have heard it speculated that this means not only that the commercial miners have all turned their rigs back on, and not only are they expanding their fleets, like, for example, we got word a couple of weeks ago that Swan Bitcoin is now predominantly a mining company, and that they've added a tremendous amount of mining capacity within the last year. But even on that, even taking that into account, the scale of the increase in network hash rate is significantly beyond that, to the point where many people are speculating now that there have to be nation states getting involved in mining, and we already know they are. Marathon had that deal with the United Arab Emirates, I believe, where they were going to partner on a huge commercial mining facility over there. But we know it would be in Russia's best interest, for example, if they were mining. It's rumored that countries like North Korea are mining, but there have to be other countries that are joining in the mix, because there's already a tremendous amount of network hash rate on the network, and for it to increase by 12%, plus the 7.3% we just had. We're talking, almost 20%. The 20% increase in network hash rate with the sheer number of miners out there, the sheer amount of mining capacity, that's not like just adding one more mining farm. That's just insane to think about. So it would not be unreasonable to believe that there is a big player out there, and that big player, we're talking maybe nation state level big, not just corporate big. Either way, blocks are currently screaming in right now. Bitcoin's protocol aims to have one block found on an average once every 10 minutes. If they're coming in faster than that, the network increases the difficulty it takes to find the next block. If they're coming in slower, which does happen from time to time, for example, when all the miners shut down, a significant portion of the miners shut down because of the cold weather, or 4 years ago almost now, when the China miner ban happened and all the miners had to shut down that were in China and relocate, or many of them did anyway. So from time to time, we get a decrease in the difficulty adjustment to speed blocks back up. But currently, blocks are zooming in at 8 minutes and 55 seconds. I don't recall seeing an 8-minute block time in the history of this podcast. I'm sure it's happened. I'm scrolling back through my notes, though, and the fastest I'm seeing are a couple of weeks ago when we were 9 minutes and 21 seconds. A couple of months back prior in August, we saw 9 minutes and 16 seconds. Scrolling even further back, I've gone back several years now. There was a 9 minute and 1 second. So that's as close as we got. And that was over a year ago in February of 2023. Either way, blocks are absolutely screaming more than a minute faster than they're supposed to. And because of that, we're going to have another big difficulty increase unless something happens in the next 1,151 blocks to change that. All right, real quick, I want to take a minute to thank those of you listening on your favorite Podcasting 2.0 app, such as Fountain. You can, of course, support your favorite podcast through the value for value method by listening to your favorite podcast on Fountain or Breeze. You can stream sats as you're listening, or you can send a one-time boost where it's a message, but it's a Lightning transaction, so it's a shout-out where you're tipping some sats. But beyond that, you can also earn sats for listening on Fountain. This has gotten a little tighter than it had been. It used to be you earn sats pretty much automatically for the first hour of podcast you listen to. Now, the last time I listened to a podcast on Fountain, I didn't earn any sats, and that was that way like 3 nights in a row. So now they average, they randomly assign whether you're going to earn sats or not. But still, you're going to listen to podcasts anyway, so you have a chance of earning sats. And in addition, they have featured podcasts where you can be paid sats to listen to promoted podcasts. And I have a little bit of shame to admit here. I didn't know it, but I listened to an S-Coin podcast last night, and I did so because it was their featured podcast, and I did it for the sats. It was brutal. I didn't finish it, but I did earn about 30 sats for listening to the comedy ensue. I'm not going to name the podcast, but basically they were talking about how wonderful it was that the DeFi system was going out and promoting the responsible regulation, working with regulators to try and regulate their industry. And they went on to talk to somebody who now works for one of these altcoin companies that proclaims to be DeFi, but obviously isn't, because it's a company that runs this protocol. And they used to work for FinCEN, and they were bragging about how all the great things they did at FinCEN. For example, they led the way in providing a process where you can get a waiver to be able to use a VPN if you have a relative in China or Russia or someplace where they need to be secret in their communications, as opposed to like privacy by default being a human right. And you shouldn't have to prove to FinCEN or some government agency why you should be able to protect your private communications from a despot, a dictator, or from a regime like they have in Iran or anywhere where, even in the United States, you don't necessarily want the government seeing everything you have to say. So I thought that was really disgusting, but I got paid 30 sats for listening to it, and I listened to it with the volume set as low as I could possibly do until I just finally turned it off completely. But I'm getting off on a major tangent here. The point being, Podcasting 2.0 will let you support your favorite podcasts, and you can also earn some sats while you're doing so. And speaking of our listeners, our geographic distribution of listeners has remained exactly the same. It's been unchanged since, I believe, January 24th. The top 10 countries are still as follows. Number 1 is the United States. So thank you to my fellow Americans listening from wherever you are across this huge country, where the temperature has ranged everywhere from hot and sunny to absolutely Arctic cold this week. Number 2 remains Argentina. So muchas gracias, amigos, in Argentina. Number 3 remains Germany. So Dankeschön, mein Freunds in Deutschland. Number 4 remains Luxembourg. Again, Dankeschön, mein Freunds in Luxembourg. Morien. Number 5 remains Canada, where according to the Canadian Bitcoiner podcast, the weather's actually been fairly nice the last week. Nice enough so that they were spending some time outdoors, which for a Canadian, that definition of nice might be a little bit different than it is for someone who lives in the southern United States, where we put jackets on and bundle up when it gets into the 50s, like it is right now. We've got another cold front moving through. Number 6 remains Spain. So muchas gracias, amigos, in Spain. Number 7 remains Colombia. Hola, muchas gracias, amigos, in Colombia. Number 8 remains Sweden. Thank you to everyone listening in Sweden. Number 9 remains the United Kingdom. So thank you to our friends in the United Kingdom. And number 10 remains Venezuela. Once again, hola and muchas gracias, amigos, in Venezuela. As I mentioned, it is another chilly night. I'm wearing a jacket here in my studio. The temperature is about 57 degrees outside, and I'm spacing on my Celsius conversion, but I think that's about 13 degrees Celsius. So as I said, when it comes to Canadians' perspective of what is cold and a Floridian's perspective of what is cold, those can be two different things. So when they're talking about nice weather, it might be significantly colder than the 57 that I'm saying is cold. But I digress. On to the news. Speaking of S-Coins, and this is not an S-Coin podcast, but one of the breaking news stories in the crypto space yesterday was that Solana, their network, went out of service for 5 hours. There was some sort of outage, and the network was just completely unavailable for approximately 5 hours. I know Bitcoin OG Adam Meister actually went on the defense of Solana, saying something along the lines of compete, don't complain. Instead of worrying about S-Coins, worry about Bitcoin and making Bitcoin better, worry about your life, making your life better. But the reason I wanted to point this out was because Bitcoin hasn't had an outage since like 2009. It did, in fact, have one when Bitcoin was brand new. There were some bugs in Satoshi's original code. But for the last, 15 years, Bitcoin has had an uptime of 100%. And one of the reasons other blockchains have downtime is because they're not decentralized. Because even when they are quote unquote decentralized, people aren't running their own nodes. They're hosting a node on a virtual private network or virtual private server, or it's basically they're being hosted on Amazon's web server. So if Amazon has a problem, their S-Coin has a problem. Amazon could go bankrupt and it wouldn't affect the Umbrel node running in the corner near my computer desk. Of course, the price is off in the news, and the price is doing quite well. As a matter of fact, it's ticked up a couple $100 since I've started talking. So I need to speed through the news and do our DCA stack before things get out of control here. Again, price shouldn't be your primary focus. Also, as Adam Meister says, you need to have long-term thinking. You need to be thinking about at least 1 4-year cycle from now, if not 10 years from now. Not worrying about the price, but worrying about the size of your stack. Of course, we already talked about how the price was affected by the Bitcoin that was being sold by the different bankruptcy courts, or by the different bankruptcy, the different companies that are in the bankruptcy proceedings. And apparently that isn't over, because we had that huge $1 billion dump by FTX a week or so ago, but now it's looking like Gemini, their Gemini Earn, or their Genesis, their lender Genesis that was entangled with the Gemini Earn program, has filed a motion in U.S. bankruptcy court seeking to dump a significant amount of Bitcoin on the block. And by Bitcoin, I mean GBTC. That was tied up Bitcoin, because once again, this has to do with that Bitcoin, or that GBT, that Grayscale Bitcoin Trust Bitcoin price arbitrage. The what went from a premium to a discount, which is what caused all these companies to go bankrupt in the first place. According to Reuters, cryptocurrency exchange Gemini Trust Company said on Saturday that crypto lender Genesis has filed a motion in U.S. bankruptcy court authorizing a sale of trust assets and seeking authorization to monetize its interests in 2 Grayscale Ethereum trusts, securities that provide investors exposure to cryptocurrency. So, they can just flat out liquidate their GBTC because it's an ETF now. Apparently, they've got messed up in Ethereum and some other S coins as well. The Grayscale Ethereum Trust has not been converted into an ETF yet, although they do have an application for that to happen. But if it follows the timeline that the Bitcoin ETFs did, that could be years from now. So the only way out would be to liquidate the shares of their trust. They couldn't just flat out dump Ethereum, so that's a slightly different story. It doesn't really affect Bitcoin anyway. But basically, the long and the short of it is Genesis has about $1.4 billion in Bitcoin that they're going to dump possibly as early as, well, the hearing is tomorrow on the 8th, so possibly shortly thereafter. And we already saw what $1 billion being dumped will do. And, that was lower the price by about $2,000 for a couple of days. So we might get a dip out of it. We might not. Even if we do, this too shall pass. Obviously, we previously reported on the FTX dump. And so while the bleeding may continue for a while, it is important to remember it will eventually stop. Along those lines, BitMEX Research has been reporting the daily inflows to the Bitcoin ETFs. And, you have to do a little bit of math there because these ETFs have been wildly successful, but you have to take a total overall view and determine what the net inflows are when you account for how much of the Grayscale ETF has been dumped. But even so, we've had a net inflow into the ETFs of more than $1.5 billion. So even with all of the GBDC being dumped, more Bitcoin is flowing into the other ETFs than has flowed out of Grayscale. In fact, GBTC's outflow today slowed to as little as $81 million. I mean, that's a drop in the bucket, considering more than $81 million has been flowing in to the ETFs on a daily basis. And eventually there will be no more GBDC that people want to sell, at least not, more than just than the normal ebb and flow of any ETF. Also in the news, the COPA trial is underway in England, as I mentioned in the intro. COPA stands for the Crypto Open Patent Alliance, and they're suing the CSW character, who we don't normally like to name, who claims to be Satoshi Nakamoto. They've kind of gone on the offensive finally. And Norbert on Twitter has been doing a play-by-play of the first 3 days of the trial. He's been sitting in the stands and tweeting highlights as they happen, and then doing a recap at the end of the day. He's at BitNorbert on Twitter if you're not already following him. His recap for today is reflections on day 3 of COPA v. Wright, the identity issue. Yesterday gave us a feel for the level of absurdity to expect from this trial, and today continued to deliver. We saw Wright continue to insist that he couldn't have forged some documents because he would have done a much better job. It continues comically. It's quite a long post, but basically the trial's going exactly like you would expect it to do. CSW has submitted documents as evidence in his last trials that he's been involved in, whether it's against Hodl or not, or whether it was the Kleinman v. Wright in Florida trial in federal court in the United States that were not only proven to be forgeries, even his own hired court experts agree they were forgeries. And apparently today, according to the reporting by Norbert, his excuse for that is they're not forgeries because I'm very smart and I would have done such a good job that you wouldn't known they were forgeries. And we'll see how that holds up. Bold strategy, Cotton. It would be interesting to finally put this nonsense to bed. The problem is when you're dealing with somebody who probably believes his own lies at this point in time, if he's a sociopath or something else incredibly wrong with him, I know people that have some pretty weird ideas in their heads, believe things that are obviously not true, that couldn't possibly be true. And there's just no convincing them they're not true. And that may very well be the case with CSW. I don't know. I've never met the man, but in fact, all I've read are these accounts on Twitter, but it's distinctly possible that he gets spanked in this trial and that he continues losing in court and just doesn't shut up, just doesn't go away. He will become less and less relevant because of his ability to just harass and sue developers and Bitcoin companies and try and block the use of the sharing of the Bitcoin white paper, for example, in England, where Bitcoin.org had to remove it from their website for English users, etc. Maybe that'll be diminished, but I'm not, convinced he will ever go away. And I don't think it really, in general, it matters because he could also win all of these trials and it also won't stop Bitcoin. Maybe the developers will have to become pseudonymous, anonymous. That may have already happened. We've had, the core developers announce that they were quitting and leaving the project for various reasons. And that doesn't mean that they didn't say, hey, I quit. And then, oh, this new developer that we just appointed is just a pseudonym. Who knows? Speaking of shit shows, it appears that, as Marty Bent and Matt Odell like to say, the bank runs continue, with the next domino to fall looking like it very well could be New York Community Bank Corp. The Guardian.com was reporting New York Community Bank Corp shares plummet amid unease over regional banking. Barron's reported NYCB stock falls after Moody's downgrades debt to junk. And the New York Times, who I can't stand quoting because they have gotten so bad in the last few years, they're basically a tabloid in my humble opinion, but they are reporting plunge in New York Community Bank stock stirs fears of wider crisis. New York Community Bank Corp's plunging stock price highlights risks that loom over lenders large and small. And of course, just 2 days ago, Chairman of the Fed, Jerome Powell, comes out and said that, according to Yahoo Finance, Powell warns of possible rise in bank closures. The Fed chair predicts more small banks will likely close or merge due to commercial real estate weakness, but said the problem is manageable. This is not unprecedented at all, or even unpredicted for that matter. Many people, including myself, if you recall, have repeatedly pointed out that during the 2008 Great Financial Crisis, we had this initial shakeup where Bear Stearns fell. There were the bank failures in March of 2008. And then there was a period of relatively calm, and it looked like, maybe they'd gotten a hold of it. And then lo and behold, September rolled around and we had the huge Lehman Brothers collapse. And finally, the government had to step in and bail out AIG. And then they had the TARP program, the Troubled Asset Relief Program, the quantitative easing to try and stabilize the economy. We had a recession. But the point being, there was a 6 or 7 month period where it looked like everything was hunky dory. And of course it wasn't. That may be lining up to repeat here because according to Jerome Powell and according to multiple media outlets, it looks like more banks are getting ready to fail. So despite the fact we had the bank term funding program prop up many banks, that might not have been enough. Also, bank term funding program is geared up to end in a little over a month. So the banks that have been relying on that to stay solvent when they really weren't, to appear solvent when they really weren't, some of those are going to have to face the music here in just a little over a month. However, while that may be bad news for normies and for bad news for people with cash in smaller regional banks, that isn't necessarily bad news for us Bitcoiners. In fact, many people are predicting that this will be, in fact, good news. As you remember, the Genesis block is embedded with the Times of London headline, Chancellor on brink of second bailouts. The whole inspiration for Bitcoin was the 2008 financial crisis. So while people say, Bitcoin's never been through a recession before, this could be bad for the price of Bitcoin, this could also be Bitcoin's time to shine. This is Bitcoin's environment. This is what it was designed to do. This especially now with more normies getting into Bitcoin, especially with the ETFs exposing people to Bitcoin, more normies to Bitcoin, with companies like MicroStrategy and countries like El Salvador putting Bitcoin in their treasury, making Bitcoin a big part of their investment strategy. Those people, those countries, those individuals will look like geniuses when everything else is falling apart and Bitcoin isn't. And Cointelegraph.com is reporting the headline, BTC price to 1 million? Bitcoin bulls dare to dream as NYCB hits 1990s levels. They go on to say, Bitcoin bulls eye Bitcoin price potential as NYCB looks to spark the next episode of the U.S. regional banking crisis. So there are plenty of people that say this is good for Bitcoin. Eventually, the hyper-Bitcoinization, the end process for hyper-Bitcoinization will be the failure of fiats, the failure of banks. I mean, in hindsight, this was inevitable, right? As they like to say. So this is just, sadly, one of the things we'll have to go through in the end stages of fiat, not because of Bitcoin, not because of Bitcoin succeeding. Bitcoin, thank God, will be there as the life vest. Bitcoin will be the escape hatch. These things were doomed to happen anyway. And so while it might be bad for the normie. It's what we all anticipated. It's what people are predicting. It's what Austrians have been predicting for the longest time. What many people have been predicting. Even what a lot of gold bugs have been predicting for the longest time. They just put all their faith in gold. Many still cling to that because that was their historic hedge against inflation, their historic stellar value in times of turbulence. Fortunately, now we have electronic gold, we have Bitcoin. And so instead of just preserving our value, you have the potential to potentially even grow that value. NYCB isn't the only problem facing the economy. For example, just a week or so ago, we had the jobs report showing that that the jobs were just booming, that new jobs are just booming. USAtoday.com, for example, reported, despite high-profile layoffs, January jobs report shows hiring surge, low unemployment. Going on to report that the economy logged 3,333 new jobs in between November and December. And, of course, that's always BS because, well, there are three types of lies: lies, damn lies, and statistics. And government statistics are always the worst. Government statistics are always wrong. These job numbers are always wrong. They come out with the numbers, a month later they revise them, 6 months after that they revise them, a year later they revise them again. Multiple times we've seen where they predicted, a surge of like 350 to 400,000 new jobs. And by the time the revisions are done, it was a retracement of 1 million jobs. And we had, 600,000 jobs lost when the initial numbers were, huge job gains. So take that with a grain of salt. Also, there are more jobs out there potentially, but they're not necessarily good jobs. All these big tech companies that have laid people off. Well, if you lost your job at Facebook or Microsoft, but you got a job working at Starbucks or McDonald's, that's a 1-for-1 trade, but your situation is by no means the same. And furthermore, we have another headline where it was reported on Yahoo Finance just 3 days ago. Retail employees are working fewer hours. Here's why that is a risk to the economy. The article goes on to say, yes, the labor market grew at a much faster pace last month than forecast, but one key metric, averaged hours worked, declined. The article goes on basically to describe there are more jobs, but they're part-time jobs. So you got laid off from Microsoft making $180,000 a year. Now you have 3 jobs. You work at Starbucks, you work at McDonald's, and you work at Taco Bell trying to make ends meet. You're working 10 hours a week at one, 20 hours a week at another, 20 at another. So you're only working 30 hours a week. You're working a minimum wage job. According to the Department of Labor, we've increased, instead of losing 1 job, you've gained now 2 because you lost 1, but you gained 3. So it's a net gain of 2 jobs, even though it doesn't take a rocket surgeon to know that, a minimum wage part-time job is not the same caliber as the jobs we've seen being shed. Banking jobs, high-tech jobs, engineering jobs. There have been, it's even the previous article that said, despite high-profile layoffs, January jobs report shows hiring surge. High-profile layoffs, meaning big companies, good-paying jobs. Those were traded for crappy part-time jobs. So not a positive sign if you're a normie. Also in potentially not so hot economic news, Yahoo Finance also reporting 2 days ago, the U.S. money supply is doing something no one has seen since the Great Depression. M2 money supply is notably falling for the first time since 1933. The article goes on to emphasize all 4 previous instances led to deflationary depressions and a sizable increase in the U.S. unemployment rate. Most economists will tell you that unemployment is a lagging indicator. You don't get unemployment until you're already in the depths of a recession. Repression. It reminds me of the Santa Claus and His Old Lady song by Cheech and Chong, where he says, we're in the middle of a repression, man. He says, don't you mean a recession? Repression, recession. They're all the same. But I digress. Companies don't like to get rid of their employees for multiple reasons. Small business people in particular, they think of their employees as family members and it pains them to let them go. Also, even if they don't, it's hard to find good employees. It's hard to hire people. It costs money to hire people. It costs money to train people, to keep good people, to retain good employees. So you want to hold off on layoffs as long as you can. So by the time the big layoffs hit, these companies are already in trouble. The economy's already in trouble. So despite the fact that they say the unemployment rate is lowering, which I remind you is a statistic, and statistics are the worst type of lie, Even if that's the case, unemployment is a lagging indicator. And what has never been a bad indicator, apparently, is the size of M2. And as we just read, the M2 money supply is falling for the first time since the Great Depression. On an optimistic note, Michael Saylor keeps stacking like a madman. Michael Saylor tweeted just yesterday, in January, MicroStrategy acquired an additional 850 Bitcoin for $37.2 million and now holds 190,000 Bitcoin. Please join us at 5 p.m., blah, 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 while they talk about their financial results, etc. So apparently they were doing an earnings call, and he tweeted this out. But the point being, they acquired 850 Bitcoin in January. The daily miner reward right now is about 900 Bitcoin a day. So essentially, Michael Saylor's MicroStrategy bought an entire day's new issuance of Bitcoin in the month of January. If there's 30 days in a month, and he sopped up all the new Bitcoin issued in mined in one day, if there were just 30 other Michael Saylors out there, 30 other companies, maybe a country, who knows, doing that, all of a sudden we're going to be out of Bitcoin. And I remind you, I keep talking about the halving coming up. That 900 new Bitcoin a day is going to be cut to 450 Bitcoin a day. So if Michael Saylor had pulled that off just 2 months from now, he would have bought 2 entire days worth of Bitcoin mining supply. This cannot go on for too much longer, cannot increase. More companies can't emulate Michael Saylor. More countries can't emulate El Salvador, etc., before there just isn't any Bitcoin on the exchanges to purchase. And when there is not any Bitcoin on the exchanges to purchase, obviously numbers go up. Speaking of MicroStrategy, Bitcoin is the revolution on Twitter tweeted yesterday, MicroStrategy is killing it, and they're not talking about the number of Bitcoin they own now, but it is kind of related. He's basically talking about the stock performance of MicroStrategy. And he's tweeting a chart saying MicroStrategy outperformance since adoption of Bitcoin strategy. And it shows MicroStrategy has increased in value by 305% since Bitcoin adoption. Bitcoin itself has only increased by 260%. The S&P has only increased by 48%. The NASDAQ 42%. Gold by 1%. Silver and bonds have both gone down. Microsoft, Google, Meta, Apple, Netflix, Amazon, Oracle, IBM, etc. have all increased by significantly less. In fact, less than a third in the case of Microsoft, and less than 3% in Amazon's case. So MicroStrategy is indeed killing it. And that gets back to my point that, people are probably watching MicroStrategy and already noticing just how well they're doing. But imagine what that's going to look like in a year from now, when we're at a new all-time high and when we're going on that face-melting rip. If Bitcoin 10x's and all of a sudden we're talking 3,000% or 30,000%, whatever, based on what Bitcoin shoots up to, corporate FOMO will be real. MicroStrategy doesn't have to do too much better before that dam breaks, and other companies are going to say, I need to do this. Maybe not necessarily the biggest companies in the world to begin with, but another MicroStrategy, and then another MicroStrategy, and then maybe a slightly larger company. And as I mentioned, we only have room for 30 MicroStrategies before we're out of Bitcoin, and that's only going to be 15 MicroStrategies after the halving. Of course, there will always be Bitcoin for sale. What will happen is that Bitcoin will become more expensive. So the $30 million will buy half as much Bitcoin, or a tenth as much Bitcoin, or 1% of the Bitcoin, as the price goes towards infinity, up and to the right forever, Laura, forever, to quote Michael Saylor. And I want to address this, speaking of the halving, I want to address this diminishing return FUD again, because every year as we approach the halving, there's 2 FUDs that raise their ugly head. I've mentioned repeatedly that miner death spiral FUD, which we haven't heard a whole lot about this time, but I'm sure is coming. And then there's the diminishing returns FUD, which says that every halving, the impact that it had is decreasing. And I think I went into great detail on this last episode, where I said that the last cycle, that first of all, there was only 3 data points to go on, and you can't exactly make you can't draw any conclusions based on 3 examples, or 2.5 examples even. But more importantly, the last cycle was just bad all the way around, because it had the lockdowns, It had the China miner ban. There were just all kinds of reasons why that wasn't a normal cycle. And of course, if you look at the charts, it was a bit of an outlier. Numbers still went up. We still got a new all-time high 6 months to a year after the halving. But we had a weird double top with the trough in the middle representing a little bit of FUD and representing the China miner ban. So it just wasn't a normal year. But Econometrics goes on to say there's no such thing as diminishing returns. Econometrics on Twitter, by the way. There are only assets with small total addressable markets. You don't believe me? Check out the growth of Apple and Microsoft after they crossed the 1 trillion market cap threshold. Do you still have doubts about Bitcoin? And it goes on to show a graph of the performance of Apple and Microsoft, and they go parabolic, and they don't go parabolic until they were already past a market cap of $1 trillion. So the concept behind diminishing returns often relies on the logic that, the amount of Bitcoin is being cut in half, but that half is smaller. Going from 50 to 25 is more significant than going from 25 to 12 or 12 to 6 or 6 to 3. And that doesn't take into account the fact that even though we're only going from, we're only going to reduce basically 3 to 3, cut the Bitcoin in half from 6 to 3, that Bitcoin 4 years ago was $2,000 Bitcoin, and now we're talking $44,000 Bitcoin. So the money involved is significantly more. Plus, it doesn't. The other part of that FUD is saying, well, going to 10x when you're at 1,000 is only adding $10,000 more of inflows, and when you're 10xing from 100,000 to 1 million, you're adding 900,000 in inflows, and that's apples to oranges. Is not significant. Econometrics does a pretty good job of putting that part of the FUD to bed, because clearly these companies were all past $1 trillion market cap before they went parabolic. So Bitcoin is its own thing. Bitcoin's going to do what Bitcoin does. I don't think the halving cycle is going to go away anytime soon. I think we have many, many more halving cycles in us, at least 2 more halving cycles before we maybe have the hyper Bitcoinization. And then you have the super cycle. So it isn't that the halving doesn't have any effect anymore. It's just that the adoption of Bitcoin is so explosive that there's no pullback, that it's just up and to the right with no dips. And who knows? All that remains to be seen. Again, all that should matter to you is that you're increasing the size of your stack so that when hyper Bitcoinization does happen, you're not left out. All right, let's get on to why we're here today, and that's not just to talk about Bitcoin and the news, but it's because it's Wednesday, and every Wednesday is DCA Wednesday. And if you're just following us and you don't know what DCA Wednesday is short for dollar cost averaging, and dollar cost averaging is an investment strategy where you invest your money in equal portions at regular intervals, regardless of price. For example, this will be our 133rd stack. We started stacking Bitcoin every Wednesday, all the way back on July 28th, 2021. So far, we've stacked 132 times, converting a total of $2,640 in fiat, including $59.40, into 8,860,995 sats. I'm getting a bit ahead of myself. Our equal portion we chose is $20. We've been stacking just $20 a week. Our regular interval, of course, is weekly on Wednesday. Those are you do you things. I chose $20 because I wanted to choose an amount that was small enough that anybody listening to this podcast should be able to come up with $20 to stack. But by all means, if $20 is a pittance to you, then you do you. The important part being you choose an equal portion, something that you can stack regularly every week or every 2 weeks or every day or whatever regular interval you choose, and you stack without regard to price. To grow that stack, as usual, we're going to do so with the Cash App. I've been using the Cash App for the entirety of this podcast because I think it's one of the easiest ways to stack sats. They are not a sponsor of the show. There is a referral code in the show notes. If you are not using Cash App and you would like to use Cash App, please consider signing up by clicking on that link, using that referral code. You'll get something. I believe currently the offer is $5 free for signing up, and that will also send $5 to the podcast. So you'll get $5 more to invest in sats. What is that? 10,000 more sats than you would have had otherwise, and the podcast will be able to do so as well. So you'll be getting paid to help support the podcast, and you'll be using a pretty cool app as far as that's concerned. I already have Cash App open. I already have $20 in there. I'm tapping on Bitcoin, tapping buy, enter in $20, tap and confirm. And boom, just that easily, we've purchased an additional 43,864 sats. We did so at a price of $44,570. So Bitcoin got a tiny bit more expensive while I was talking. That increases the size of our stack to 8.9 million sats now, 8,904,859 sats. It's looking like we're easily going to reach the 9 million sat goal in then just the next couple of stacks. Hopefully we'll get to that 10 million sat goal before we do set a new all-time high, and that gets harder and harder to do. This purchase also increased our average cost basis by $77.84. So our average purchase price now is $29,871.33. Still significantly cheaper than what Bitcoin is currently valued at. Obviously, if we'd YOLO'd in July 31st, 2021, we would have stacked at $39,716. So we'd be in the green. We would have made a profit, but we would have had significantly fewer sats. As it stands, if Bitcoin hits $100,000 in this bull run, our stack will have a value in US dollar terms of $8,904.85. If Bitcoin goes all the way up to $1 million, that would be $89,048.59. Neither of those is too shabby, considering we've converted a measly 2,660 US dollars into that stack, and we did so at just $20 a week. Before I go, I want to talk a little bit about why I do this podcast. I do this podcast because, well, I used to listen to the OGs. Adam Meister is one of them that I liked. Andreas Antonopoulos, of course, is the original OG. People don't necessarily consider him a podcaster because he did a lot of videos on YouTube, but he was also on the Let's Talk Bitcoin podcast. He's done his fair share of podcasting. He was on Joe Rogan's podcast twice, I believe, trying to orange pill Joe Rogan. I think he successfully did, because we all know Joe Rogan's a Bitcoiner now, even though he kind of plays dumb and dodged the question for the longest time. But I'm pretty sure you couldn't sit across the table for 2 hours with Andreas and not at least get off zero. But I digress. Adam Meister he's been in Bitcoin since I think since 2013. And he used to do a daily podcast, the One Bitcoin Show. And he still does one about once a week or so. But when he did a daily podcast, even if there wasn't a lot to talk about, the one thing I got out of his podcast was that he was continuously upbeat. You know, he always has the slogans: strong hands, long-term thinking, Bitcoin is the next Bitcoin. Now he has added confident decentralist to that, but he was always upbeat. Compete, don't complain. And in the depths of a bear market, he was always there daily, like your daily affirmation, to remind you to keep your eyes on the prize, to keep stacking. That, you know, we all know Bitcoin is going to succeed. It's unstoppable. It's hope. Nothing has changed. When the price is up, when the price is down, the reason you got into Bitcoin remains the same. Maybe you got into it for the money at first, but after you've been a Bitcoiner for any length of time, you get into it because of the freedom aspect, because Bitcoin is hope, because you know that fiat is theft, that taxes and inflation are flat out slavery, because they're stealing your time, the hours of your life that you traded for the money they're printing out of thin air and then devaluing by a goal of at least 2% a year that they're stealing from you. That's 2% of your life, of the hours that, not 2% of your life, but 2% of your life that you've dedicated to your job, of your 2% of your work hours. Every year they're taken from you. And that compounds, by the way, when you talk about the long term. And of course, we know inflation's been greater than 2%. Even they're admitting it was, more like 9% a year ago. And if you've been grocery shopping, it's more like 50%. Your price of your house is more than doubled in many cases, in many instances. Rent is more than doubled. Here on the Space Coast, a friend of mine just posted on Facebook the other day that they were looking for a new insurance company because their homeowners insurance, and they're not even on the beach. They're on Merritt Island, which is, several miles inland from here, on an island between Cocoa Beach and the mainland. And the housing prices there are significantly cheaper because they're not beachfront. And his homeowners insurance went up to $13,000 a year. That's more than $1,000 a month just for your insurance. I mean, imagine having your house completely paid for. We're not even talking about property taxes, which are very expensive in Florida. Just your homeowner's insurance is more than $1,000 a month. That used to be a mortgage payment. That used to be more than people would pay for rent just for their insurance. And that is a function of inflation. It's because regardless of what the government tells you, we know that life has gotten more expensive. Anyway, I'm getting onto a negative track here when what I meant to talk about was Andreas Antonopoulos and Adam Meister. Adam Meister, relentlessly upbeat, relentlessly optimistic and positive. Andreas too, but more so in a different way, and in Andreas's way, in his "You Can't Stop Bitcoin." Any attempt to stop Bitcoin is the title of one of his speeches. Is worse than useless. If you don't know who Andreas is, if you're new enough to Bitcoin that he was already kind of out of the picture, if you haven't watched any of his old videos, go back and watch them because they're fantastic and they hold true because the concepts he's talking about have not changed. They have nothing to do with price. They have to do with the technology. The underlying technology is the same. The reason why Bitcoin will succeed is the same. None of that has changed. And we're getting ready to go into a bull run. And so the fun is getting ready to start. It's going to start getting excited around the halving. And then maybe we'll have a lull after the halving when there hasn't been an immediate new all-time high. And people are like, well, where's the halving? Where's the bull run? I thought you said there was going to be a bull run. And of course, the bull run doesn't come until like a year, 6 months to a year after the halving. Last halving, we had the bull run, and then we had the conference that, that everyone was saying 100K by conference day. And of course, it didn't happen. There have been multiple times when we've had the halving and people expected great things and they made bold predictions and they didn't come true because they made those predictions for like 2 months after the halving. And that's just not the way it works. So my point being, it's going to get exciting even if there's a little bit of a lull in the excitement after the halving. But then the face-melting bull run is going to kick off, and that's going to last about a year. And that's just going to be really exciting. So more people are going to start listening to podcasts. The podcasts are going to be a little bit more fun and a lot more optimistic than they had been during the crab market or the bear market. And then, of course, if history repeats, there'll be a pullback, and then there'll be another Bitcoin winter, and things will be a little more depressing, a little less optimistic, as at least how they appear, because there's a lot of building and a lot of great things that happen during the bull run during the bear market when the noise quiets down a lot. But the point being, Adam Meister and Andreas Antonopoulos were daily, or at least in Adam's case, daily reminders to stay focused and stay optimistic. And I kind of wanted to do a little bit of that. And I found myself, as the news has gotten a little more pessimistic, having some podcasts that were less than 100% optimistic. And I'm really trying to keep it as optimistic as possible, even while bringing you the news. So I want to emphasize that even though I bring negative headlines to your attention more often than not recently, especially today, talking about the economy, the banking crisis maybe continuing, fiat eventually failing, those all seem negative, but in general, you're here. You're a Bitcoiner now. So it's really not, this really isn't pessimism. This is just reminders of why we're here, why we got in the lifeboat, why we adopted Bitcoin, that why we're so desperate to orange pill so many of our friends to get them into the lifeboat as well. So try and stay optimistic. Try and keep that long-term thinking. Sometimes it's harder to hodl during the bull run than it is during the bear market because you watch your stack go up to maybe life-changing money, and it probably is going to come back down, at least a little bit until the next halving. So we're going to go through a lot of emotions, a roller coaster of emotions together in the next year or so. And I promise I'm going to try and keep it optimistic as possible. If it seems like I'm not being optimistic with some of the headlines I talk about, keep in mind I'm presenting them as evidence that Bitcoin fixes this, that Bitcoin is hope, and that we are marching towards, as Swan Bitcoin likes to say, that bright orange future together. And along those lines, I'm going to wrap it up. But before I do so, I want to ask you to help support the podcast. And I want to ask you to do me the favor of following us on Twitter. If you're not already following us on Twitter, we are at BTC Bulletin Pod. At BTC Bulletin Pod. This will really help. I don't post a lot, just usually one or two of the headlines that I'm going to talk about in the next episode, and a link to the latest episode, etc. So it won't be a burden on your newsfeed. I'm not going to spam you, but what it will do is it will help feed that algorithm monster. It will help us showcase this podcast to more people. If you're following us on Twitter, people who are following you or that you interact with are more likely to see our posts. And so that will really help. The other thing I'm going to ask you to do is, regardless of where you listen to your podcast, rate or review the podcast or star the podcast, depending on the platform you're listening to, because that also helps feed the algorithm monster. The more people we can get exposed to the podcast, the more impressions we can get, the more people are going to listen to the podcast, the more people are going to help Orange Pill. Of course, you can always support the podcast financially through Podcasting 2.0 or via our Spotify support link, etc. There's multiple ways you can do so. All of them are listed in the show notes. But more importantly, what I would appreciate is you helping us feed that algorithm monster to help us expose more people to Bitcoin, help us expose more people to dollar cost averaging. Because I think we've already shown that dollar cost averaging has been a successful way to stack sats. Maybe it took a year or two to get to that point. We're there now. So if you want to help Orange Pill your friends and they think they're too late, you can refer them to this podcast, because we've shown that you're not too late, that even if you only have $20 a week to stack, you can build a stack of sats that will be life-changing one day. All right. That is all I've got to say. I need to go back and edit this up because I had one or two spots where I had to hit mute, where I had a coughing fit. Hopefully I did a good job of cutting those out. I will have done a good job of editing that, and it doesn't sound atrocious. If I miss one, I apologize if I accidentally blow your eardrums out. Either way, though, don't forget to join us next Wednesday and every Wednesday while we continue to grow that stack together and keep on stacking those sats, you sexy sat stackers.